There, welcome to Wyckoff Technical Analysis session for Ethereum. So previously we already shared in the past sessions that Ethereum has a higher downside risk, and the sign of weakness over here that I mentioned earlier is a 60% chance. What happened during the crash is actually triggered that event to happen. It hit the level of sign of weakness. So let's dive into both the weekly and daily charts and see where is Ethereum heading. And the thing is, it hasn't recovered a key level. Bitcoin has, but Ethereum hasn't. So that's big. So here, the weekly chart. This purple key level of $4,000 is the one that I was referring to. Just looking at this weekly chart is pretty alarming because it seems like Ethereum is ready for bigger fall. But when we get to the daily chart later and look at the downward channel box, the downward trend channel box that I've drawn in previous weeks, you know that interestingly Ethereum is going through a pretty controlled drop, even after the crazy market crash just a couple of hours back. And in previous sessions, I've drawn these lines over here, but they are in pink, so it's not easy to see. Let me turn them to white. So now we see, so previously we talked about there's an opportunity or like a probability, a chance that the price will go below the purple key level and then recline to within this triangle. Before the time point near end of November, early December for a bigger breakout event. Unfortunately, this happened immediately, like between last session and this session, so that the price really is now below the purple key level. Whether or not it's going to climb back to this triangle, it's to anybody's guess. We'll look at it in the daily chart and see whether or how likely, how high that chance is. Because what we're having here, I've just turned on the Bollinger Band Cone squeeze. We've got a big swing after this plateau period, technically not sufficient to be called a squeeze, and there's no squeeze forming as of this moment. So pretty much like I said before, this line, the bottom edge of the upward channel box that started somewhere around April and got dropped around the 22nd, the week of 22nd of September, has now become the resistance. Also this pink line over here that's extended from this peak along with these second tests over here. Well, supposedly there was some successfully break out above this descending trend line, but then it has all been overshadowed by what happened during the crash. So the big picture remains pretty much the same. While this seems to have happened, I would rather wait for the candle to close to determine whether that's the case, because it can develop another weekly candle really closing below the key level, the blue key level of 3,540. Currently it's still staying between the purple and the blue key level. So I wouldn't say this is something definite for now, but the price action really shows that it can get to that level pretty easily with just one piece of news. Okay, let's get to the daily. First, check the Bollinger Band counter squeeze. This I would call that a squeeze period, even though the indicator only showed 1 day of squeeze. That's why we have this swing upwards and then immediately got smashed down because of what's been happened, or what kind of tariff has been announced. That kind of, not only tariff, but what the Chinese government had done to the exporting of rare earth. So it's basically the I don't know, the UFC game of US and China is still going on. That's outside of the expectation of many people. That's why we've got that kind of market reaction, not because of the tariff, but because of the fact that they are still actually fighting. So here, that's the lines that we've drawn previously, and the price really is coming down this way. Uh, Unfortunate coincidence, and the reason for us to have to observe is whether the price is going to able to pass this purple key level of $4,000. This is not easy. The reason I'm mentioning this is if we look at today's candlestick. Let me draw a line over here. So you see there was a peak, actually multiple candles, during late July, just this year, and then there was a sign of weakness. This is for the daily time frame that happened in late September, and the price is currently being rejected by this line right now. Let me keep this line just to the current interval and below. So in order to challenge the purple key level of $4,000, it has to first break this resistance level around 3,870. So these are the intermediate levels that unfortunately guarding also or affecting the price movements between these key levels. There is a breakout time point here near the end of this month, but then the price has to come back to this triangle for that to take effect. So if the price really climbs above this yellow dashed line but stays below this center line of the downward trending box, this blue box over here, eventually when we get closer to the end of the month, it has to break out, either goes back to challenge the blue key level that I already mentioned when I talk about a weekly chart, or it's going to break towards the upper half of the downward channel box and challenge the purple key level, and eventually this pink downward trend line. I'm just trying to see whether we should adjust this given what happened over here, because previously the line is pretty close to the ceiling. It happens in a way that's very close to the ceiling of the blue box. I was thinking about to remove it. Maybe it's actually time to get rid of it because it's going to duplicate with the blue box. What's more important is this downtrend box that we have drawn in previous sessions. The price drop yesterday hasn't actually gone very far from the bottom edge of this box. So that's why earlier I mentioned Ethereum seemed to have dropped in a very controlled manner as well, because once or as soon as it has passed this bottom edge of the downward channel and also crossing this key level of 3,540, the bull team immediately pushed the price back to within the box just to get resistance from where I've drawn the line because of where the upwards of the distribution or the sign of weakness were. So this is a good indication that this downward trend, the boundaries at least, has been followed, and I think it's a good time to adjust both the center line and the box. So I'll consider what happens in yesterday's candle and outlier events. So the wick, I wouldn't bracket that into the channel box, but then I have to adjust according to these other candles. Just to make sure their wicks are within the box as much as possible. Yeah, so if you see these two over here, this wick over here, and then this one, these two, and this one over here. So we've got 5 reference points. So to adjust the box to the right slope, they evolve over time. So initially when you have only like 2 to 3 points, it may look steeper or flatter, but when you have more price events, that happened, you have to adjust accordingly. So that looks fine for me for the center line of the box. Okay, so Ethereum, we know what kind of volume was that yesterday, so I'm not going to repeat much. It's basically like 3 times or even 4 times of the average of what we had across September and October. The big picture, remember, the first challenge is the 4,000 purple key level. If it successfully reclaimed this, then it can try to challenge still, some chance to challenge the higher all-time high. But again, this bottom edge of the previous upward channel will be a resistance line for that to happen. And downside risk is still higher than the upside. So be cautious. What happened yesterday isn't over yet, and next week's candle or even the remaining 44 hours may come down to close somewhere near the blue key level of 3,540. So remember, if you have bought the dip, have your stop loss ready. It's going to be a very wild period coming ahead. So, fingers crossed, wish you good luck, safe trading, see you in the next session.